How much should you risk? It's a big question. How big you should bet, how much you should bet on a stock, an option, crypto, any other asset class. It's a common question that I get all the time, and there's lots of question marks around this question. We're going to answer how much you might want to bet with a couple of simple things that you could do right now to answer those questions for yourself, no matter what the asset classes that you're trading. Hi, I'm Mike, and this is the Traders Mind Chat Show live. We have people joining us from Twitter, from YouTube, from Facebook. So right now, wherever you are joining in from, welcome. Why don't you go ahead and type into the chat where you're from and where you're watching this live stream. While you're doing that, I'm going to switch the screen over this way and share with you a very simple equation that I like to use when figuring out how much I should uh, position size on a particular trade, how much I should bet. And it's basically like this. So I want to figure out first, what is the market condition? And I'm going to take that and multiply it by the trade grade, right? So I'm going to figure out what's the quality of the trade that I'm taking. And then with those two simple things, then that's going to tell me my position size, how much I should risk. So we are always trying to figure out what's the current condition of the market, what's the quality of the trade that I'm looking at, and then take those two things, multiply them together, and then that's going to help us figure out very easily how much we should risk on a particular trade. So the first question that you might have is, well, what's the condition of the general market? What we've seen recently too, yesterday, the market kind of took a hit, right? Like here's the S&P 500. We were talking about it a little bit on yesterday's live stream. Pretty big sell off, over 2% on the S&P. Volume was high, and if you had positions, most of them likely got hit a little bit yesterday. So the question then becomes, well, what is the market condition? How can we tell what the market conditions are? I like to look at it in a couple of different steps. So the first step to figuring out what the market condition is first by looking at the major indexes for stocks. If you happen to be trading forex or crypto or any other asset class, the same broad concept still applies. You would just figure out, well, what are the major components of the asset class that I'm looking at, and then see, well, what's that market? How do things interact in that market? But for this, we're going to be looking at stocks. So the first thing, look at the major indexes on the monthly time frame. Take that 10,000-foot view and see which way are things moving. Are they moving up, down, or sideways? So pretty simply here on the monthly time frames, S&P is still in an uptrend. So is the Nasdaq. You could make an argument that they're starting short term to start to move sideways. The Russell 2000 has been in a sideways trend really since February, March. Similar over here on the NYSE, it's been moving sideways really since May. And then similar over here on the Dow. I've got this over here too. I like to track the IBD 50. The ticker is FFTY. It's an ETF that looks at some of the highest momentum growth stocks in the market, and it serves as a pretty good proxy for them. So I like to look at that. At this stage too, if you guys have questions, well, we'll have an open Q&A at the end. But as you have questions, go ahead, type them right into the chat, and we'll answer them right here on the spot. So, so I'm looking at the major indexes first to start to get a flavor of what the general market conditions are. Then I'm drilling down a little bit further, right? So I'm getting like a forest, trees, and individual leaves, and that's how I like to view the market, right? I like look at it as different seasons that are changing, and you could tell what season you're in by having that 10,000 foot view, but you're going to see the most subtle signs of change uh, down at the leaf level, right? Like down here on the daily time frames. We always want to keep everything in perspective because you don't want to be the guy that walks into the forest or into the park, picks up a leaf off the ground and say, "Uh oh, winter's coming," and meanwhile, it's still spring. So next step, take a look at the weekly time frames. Which way is things heading on the weekly time frames? On the weekly time frames, you're headed sideways every on every index, and it's pretty clear, right? You have not made any higher highs or higher lows on any of them. You have the 10-week line, which is flattening out on all of them. That's all indicative of sideways action. And then you come out over here to the daily time frames, and you could make an argument that the S&P is even beginning a short-term downtrend, depending on how closely you look at it. To me, I see this as still sideways action. And the reason why is because it's holding this low here from the 20th, and it's also holding the 100 EMA. Overall, like if I needed to say, like, is it more bullish or is it more bearish? At this point, it's a little bit more leaning to the bearish side, the negative side, where price has been hanging out below each of the moving averages for a few days now, and you have the short-term moving averages crossing below the longer term 50 over here, right? So this is the 5 EMA. This is a 10 EMA. That's a 21 EMA. That's a 50 SMA. The fact that these crossed below the 50, right? So you have the short term with the longer term getting progressively longer term stacked on top. That's a sign of a downtrend. So I'm considering all that kind of stuff. And so it's like, all right, there's a few things pointing towards some choppiness right now. That's one part of what's the general market condition, but that's not the only thing to consider. Some of the other things that I like to consider quite a bit, a big part of it actually, is what stocks are setting up right now. So every day after the market closes, I'll pop open MarketSmith. That's a scanning service, a stock scanning service, and I'll screen to see what stocks are setting up. The ones that I found that I liked are here. So there actually wasn't much setting up last night that I liked. There was this one here, Jones Lang LaSalle. It's in the real estate development group, and I like that. The thing that I liked the most about it was that on a down day when the S&P 500 was doing this and selling off, and so were the other indexes, it actually had a small dip, but it rallied and closed near the high of the day. And not only that, its relative strength line made a new high. So that's telling me that this, at least on that day, and the general price action too, is that this is a leader and it was tightening up near its highs. So I like that setup, and I actually placed an order for it. It hasn't triggered yet, but the idea would be that it's a sideways consolidation, and that it would break out, and then that's uh, my trading plan for this one. Aside from that, I saw Facebook and Microsoft setting up for not potential shorts, but what I like to do is where if we're in a sideways market, which we are, and you have some of these big stalwart names that are likely to catch support at a major level, then what I'll do is I like to sell puts at the level that I would love to be a buyer at. So if let's say Microsoft started to fall later today and it breaks this low, you're going to see a large pickup in volatility, and the prices of the options will likely go up dramatically. I would want to be a seller of the 200 of the puts down here at the 200 SMA, around 255, 260. Similar for Facebook. And the reason why is because these stocks are likely to get support at that level. And so I get to collect premium by selling those contracts. And not only that, if price actually goes there, then I'm getting filled at the price that I want to get filled at, which is pretty awesome. So those are the ideas that I had for today, coming into today. Not a whole lot. Normally, I'm used to seeing at least uh, a dozen ideas that are pretty interesting. Saw some C-level trades heading into today. Um, yeah, Techno Glass is starting to shape up a little bit more. The reason why I have it as a C is because the entry and the stop is a bit wide for me. There's Hood. Hood looked great back here, actually, was on the Trade Ideas list for members back here on the 21st. Nice breakout, quick gain there. Pulling back now, could be setting up again. It's on the radar. Shutterstock and Sky. So not a ton of setups right now. And the way that I look at setups in relation to the general market condition is I see it as fuel in the tank. So is there a lot of fuel in the tank? Is it high quality, high grade octane in the tank, or did somebody just pour sugar in the gas tank? Um, not not a whole lot in the gas tank right now. All right, got some people chiming in. I see a comment from Caleb that the actually the YouTube app didn't send out the alert. Oh, that's interesting. So yeah, for everybody that's here, for everybody that's watching, whatever, if you're on YouTube, make sure that you're hitting that notification bell, hitting the like, all that stuff, so that way you're getting notified when these live streams are happening. Uh, if you're on Facebook, do whatever Facebook requests. I'm not sure about them. Similar deal with Twitter. And again, well, we're going to be doing a lot more of these live streams. So you could always go back to the YouTube channel and see when the next live stream is. I'll be posting them. Actually have another one coming up tomorrow too. So what's the general condition of the market? So we're starting again with the major indexes. Which way are they moving across time frames? I'm looking at what stocks are setting up for the next day. I'm also looking at a couple of other things as well. One of them is this indicator down here. And you might be looking at this like, man, there's a lot of indicators here. Like it's actually just like a small handful, and they're each telling me different things. This down here is just simply the number of stocks making new highs versus new lows on the day, every day. This one is for the Nasdaq. So the rationale is if there's more stocks making new highs, then the index will also be making new highs. And it would be very hard for the NASDAQ to continue to make new highs if there's not stocks within it also making new highs. So when you start to see action like this, where the index is at new highs, and all of a sudden the number of stocks making new highs dries up dramatically, that's a sign that there's something wrong. Something doesn't quite smell right. So that's one of the first things on my radar that like, okay, we're probably going to pull back or experience some sideways action. I look at it both on the Nasdaq and over here on the NYSE, and you can see how on the NYSE too, you're at highs, and then all of a sudden dries up rapidly, and now we're starting to see more stocks making new lows, and that's been sustained now for a little bit. Like back here in June, barely any new lows. Now all of a sudden, like you see that red, like it's kind of hung around for a bit longer. Not a ton of stocks making new lows, but you're starting to see it's in the mid double digits, like in the 40s. Over here, it's in the 20s, 30s. Yeah, it's something to be mindful of. So those are the main things that I'm looking at relating that related to the general market conditions. There's more, but it's more than what I could cover in a 30-minute live stream. If you want more, part of our elite program where we're going through this stuff for 3 hours every Saturday and sharing a weekly game plan with members. So go check that out. Next up is the quality of the trades that I'm considering. Now, I started to talk a little bit about that with JLL. And so, what I would do to figure out some of this stuff, well, what's the quality of the trade? Um, One thing that I'll use, and I'm logging into MaraWealth.com. You see that here. One of the things that I would use is this tool here. I call it the Trade Gauntlet, and it's something else that's available to members too. And what I do is whatever stock that I'm considering, I'll run it through this Trade Gauntlet where I'm making it jump through a lot of different hoops. First, first I'm figuring out what's my entry, my exit, my target, figuring out all that stuff ahead of time. It needs to meet basic minimum criteria for me to even take the trade. And then it'll spit out how much is being risked, what's my profit, what's the reward to risk. And if it's at least three or more, then great. Then it meets that minimum criteria. For JLL, it happened to be a nearly 5-to-1 reward to risk trade, and that's minimum criteria. From there, what's my general gut feel for the trade? And so, glancing at it for and gaining more experience, you tend to have a little bit of a gut feel, and gut feel is something that I think should be cultivated over time. Yeah, you want to be able to train your eye and trust yourself, trust your gut. And the way that you're going to be able to do that is by tracking it in here. Uh, this form is also going to send you an email and tell you all that stuff. It's actually pretty cool. Then from there, I'm going through a bunch of different fundamental characteristics that I'm interested in, a lot of different technical characteristics about the stage of the base, the chart pattern, confluences for the target, support levels, the entry levels, all that stuff. The Whether this is a game-changing stock, whether it's growing in fund ownership, its industry group, management. Then I'm looking at the general industry group too, and is it a leader? Is it a leader? Is it in a leading industry? Is it a leader in the market? Is it a leader among its peers? Does it have the leadership qualities that I'm interested in? And then how does this setup compare to the general market? I take all those things into account and then I get a score. The score for JLL happened to be about 6.5, which is decent. Like for me, it's that means that it's a B level trade. So I categorize trades as A, B, or C very simply, right? So if we come back over here to the Jamboard, and so there's Three market conditions, right? I should have mentioned this earlier, but there's three market conditions, and it's green, yellow, or red. And there's three trade grades, simply A, B, or C. So right now, the market is in a red condition. And this trade in JLL is a B level trade, right? So if I'm in a green market condition, I'm going to be taking trades at 1.5 times risk. If I'm in a yellow condition, if the market's in a yellow condition, it'll just be 1 times risk. And if it's in a red condition, then it'll be half, right? So 0.5. Now, for the letter grades, this is a full position, half, and 1/4. So if I am looking at this equation here, right? And I'm trying to figure out how much should I risk on JLL, it makes it a lot easier, right? I'm taking it's a red condition, right? So 0.5. It's a B level trade, so I'm going to be multiplying this by 0.5. And so my position size on it is going to be pretty small. I'm only risking 0.25% on this trade if it triggers. Why? Because the market conditions kind of stink. It's in a red condition. It's choppy. It's difficult for stocks to make a lot of progress. I have an idea that I like in JLL, but the conditions aren't right. And it ended up being a B level trade. So I'm going to take the trade, but I'm going to mitigate my risk by taking a smaller size. And all these tools help you figure that stuff out quite a bit. So that's how much I would risk on this trade if it triggers. And this formula works no matter what it is that you're trading. So you could be looking at forex, you could be looking at crypto. Just the inputs for the market condition will change. The inputs for the trade grade will change, but the principle stays the same. You might even say that, yeah, you know what, like 1.5. That's not enough for me. I like to risk 2% per trade, or 2.5% when everything is going great. That's amazing. You could change these numbers around to whatever fits you. That's the whole point. That's the whole point of so much of trading, is to see the principles of what works and then customize it so that way you're giving yourself an edge. And that's what everybody that's had any level of success in the market, that's the recipe. Figure out what works, customize it, and then go off and do it for yourself. It's what we do with our members, and it's a recipe that's worked now for a long time. There's one more thing to consider that goes into all this stuff right here. And we kind of touched upon it with what I just said, and it's your personal psychology and your performance. So one of the things that goes into market condition for me too that we didn't talk about yet has to do with personal psychology, personal performance. If, let's say, the market is in a nice strong trend and I'm finding stocks that I like, but I'm on a losing streak, then I will factor that into the market condition. Why? Because something's not right. If the setups are there, but they're not working, and the market is moving higher and I'm not making progress, then something's wrong. Something's wrong, well, with the system, or with me, mindset, or or any of that. And whatever it is, it, it's time to take a step back and start sizing down if you're going to participate. There's a real thing called being on tilt. And if you're on tilt, it's going to make it a lot more challenging to make progress in the market, whether the trades are moving in your direction or not. Like at the end of the day, the way that a trade gets managed is going to be based on you, on the actions that you're taking. And if you're in a compromised state of mind, it makes decision making that much more challenging. And so it's good then to build in a mechanism where if you happen to be on tilt and you don't realize it, that you're automatically going to be scaling your position size down. And that's why for my formula in this, for the market condition part, I'm also factoring in uh, trade performance and personal psychology. So we covered a lot of stuff on this live stream. If you guys have questions, please go ahead, put it into the chat. I'm going to just pop this on right here. Open Q&A. This is our open Q&A portion for this live stream. So take a moment, go ahead, put into the chat any questions that you have right now. I'll give you a moment to do that. For anyone that's interested in the Mara Elite program too, you can just go to marawealth.com. Over here in services, you could click Elite Membership. And this page here tells you all about the Elite program. Actually, I'm not sharing my screen right now, am I? Here, here it is. Marawealth.com slash membership. Click services, Elite membership, and it'll bring you right here and share with you everything that we do, why this works, what you're getting with the program, and some testimonials from a few of our members. All right, let's see. Any questions coming in yet? No? All right. Then looks like we'll call it a wrap for the day. I want to say thank you guys so much for joining me on this live stream. It's been great, and we'll look forward to tomorrow's live stream where the topic has to do with the PDT rule. So for anybody that is day trading, if you have a small account, small being under 25 grand, you've got to deal with this thing called PDT, pattern day trading rule, and it prevents you from having more than 3 day trades in a week. We're going to talk about ways to work around that rule. So if that interests you, join us tomorrow, and we'll see you then. All right, everybody. Take care. Much love. Peace out.